Hello everyone, my name is Majid Rahimi and you're watching another video of FOREX Basics. If you're new to FOREX and know nothing about it, don't worry at all. You can just watch our first FOREX Basics video, which you can find at the link in the card here. Okay, let's see what we are going to learn in this part. We will know symbols and what are currency pairs. Then if someone asks you what does AUD USD means, you will have an answer. What is lot as the volume of trade in this market, and finally the magical feature of Forex market, which is called leverage. This information and lots of other techniques would be found in this channel, so if you haven't subscribed yet, it's enough to click on the subscribe button and the notification bell under this video to get notified when new post comes in. I want to ask you something before we get started. There's a Chinese proverb which says, the faintest ink is more powerful than the strongest memory. It's about taking notes. From this session, our course would have valuable information which might be forgotten soon. Taking notes will help you avoid this. So please have a notebook in your hand and write what you think is necessary. Let's start with main currencies symbols. In Forex, we use symbols to show the currency we want to sell or buy. These are the symbols of main currencies in this market. USD for United States dollar, EUR for euro, CHF for Switzerland franc, GBP for Great Britain pound, JPY for Japanese yen, AUD for Australian dollar, CAD or CAD for Canadian dollar, NZD for New Zealand dollar. There are some other contracts in this market which is provided by many brokers for customers to be traded, and any of them have symbols. I gathered some of them here. For example, XAU is for gold, XAG for silver, BTC for Bitcoin as the most famous cryptocurrency, and US oil for crude oil. These symbols sometimes are different from broker to broker, but if you want to trade them, you would find the symbol as I will explain in next videos. Okay, now after knowing the symbols, it's time to get to know about currency pairs. As you know, for buying and selling in Forex, you need two different currencies to exchange. And these two currencies appears as a pair. For example, you can get this information from market. Euro USD price is equal to 1.11035. This means the value of EUR, euro, as the first currency in the pair is 1.11035 times greater than the USD value as the second currency in the pair. When you buy Euro USD, it means that you give dollars and get euros. When you sell Euro USD, it means that you give your euros and get dollars. When you buy a pair, you give second currency to get the first. In this example, give USD to get Euro. Euro as the first and USD as the second. When the price of a pair rises, it means that the first currency is getting more expensive against the second currency. In the market language, the first currency is called currency or simply currency, and the second currency is called base currency. In this example, Euro was code currency and USD was base currency. And when you buy a pair, you give base currency to get code currency. More than 85% of global forex market transactions happen on 7 currency pairs known as the majors. There are Euro USD, USD JPY, GBP USD, AUD USD, NZD USD, USD CAD, and USD CHF. So these pairs are the most traded pairs in this market. Okay, now it's the time we can talk about the quantity or volume of our single trades. In Forex, it's called lot. A standard lot is the equivalent of 100,000 units of the base currency in a Forex trade. The second currency in pair was base currency, and when we say one standard lot or simply lot, we mean 100,000 units of the second currency. As you might think, $100,000 is a large amount of money, so most of brokers let people to use smaller sizes like mini lot, which is 10,000, and micro lot as 1,000 units. If you want to buy 10,000 units, you should buy 0.1 lot, and if you want to buy 1,000 units, you should buy 0.01 lot. And now it's the time to introduce you an unbelievable magical feature of this market, which is called leverage. Leverage is the use of borrowed funds to increase one's trading position beyond what would be available from their cash balance alone. This simply means that someone is going to give you some money and you make some profits out of his money, and then you have to pay it back. Isn't it great? It would be much greater when you know that when your account leverage is 1 to 200, this means that you can buy 200 times of your own money. This means that if your own balance is only $1,000, you have investing credit of $200,000. It's lots of money, and investing it can make you great amount of money if you invest it correctly. But what if you went wrong? In other words, what happens if we lose borrowed money? Well, the mechanism of this action does not allow you to lose the borrowed money You are on the control of broker, which gives you money, and you can only lose your own money. If you invest using high leverage and your account loses money in the amount of your own balance, the broker will close your trade and push you out of market. This situation is called call margin. I would explain you what is margin and what call margin means, but for now it's simply destruction of your account, and it means that you have lost all your money. This is why many experts see leverage as a double-edged sword. Let's see an example to see how dangerous using leverage can be. Suppose that you have an account with $1,000 balance and you buy one lot of Euro USD using leverage in this price. This is just using the leverage of 1 to 100. Many brokers even give you the leverage of 1 to 1000. And after this example, you would understand how dangerous that is. Well, as we said, you actually give $100,000 to get 89,592 euros. Prices get down and you lose $89.69, which is nearly 10% of your balance. And the point is that this price change can happen in only 5 minutes. This means that you have lost 10% of your money in only 5 minutes. And if you close this position, your final balance would be $90.31. Now I think it's clear what can happen if you invest 10 lots using 1 to 1000 leverage. It's possible to lose all your money in just 5 minutes. Well, this video has come to its end, and in the next video we're going to know about some famous Forex trading platforms, and we will learn how to install and work with MetaTrader. If you haven't subscribed yet, you just need to click on the subscribe button and the notification bell under this video to get informed about the latest videos of this channel. If you think these videos are necessary for some of your friends, share them this fully free course. Thank you for watching, have a great time, and bye.